All right, guys, you ready? Let's get down and help you make some money. Now, here's the first stock suggestion. It's called Fleetmatics. This is a company that provides software as a service which monitors data from fleets of drivers. Now, most of their business, small and medium size, they provide actionable data. They take all of this stuff and they show these guys exactly how to save money on everything. Already a very successful story. It's been growing big time. Services climbed from 2,200 subscribers in the first quarter of 2005 to 472,000 now. That's absolutely huge, and the upside just continues from here. Huge potential. Now, here's one of the things. It's a very fragmented industry. 97% of business fleets have less than 1,000 vehicles. The size, though, the overall size of the market, 31 million in geographies all around the world, because it's not just a U.S. play. I'm talking to UK, Ireland, all over. Most of these places, the company's already made some penetration. There's another 35 million vehicles in places they haven't gone yet. Take the rest of Europe and Latin America. Here are some of the benefits. If you're an owner of these businesses, you lower your fuel costs, your operating costs, fewer people on payroll, much better productivity. In fact, in one case study that the company featured on their website, the monthly return on investment was 18 to 1. Additional features will soon include a fuel card, driver style. They're going to add some Garmin stuff in there, driver logs. Remember the big crash recently with the Walmart truck? You're going to get a panoramic view from headquarters. You'll see what the driver sees. They'll post the speed, all the dashboards, all the alerts, all of that stuff. Now, in the most recent quarter, the gross margin was 76% from 65% in 2005. The company's goal, 80%. Margins expand, stocks go up. Recently, it just made a real nice reversal on the charts on a cusp of a major breakout. Through 35, I'm thinking this bad boy goes to 43 very, very quickly. Joining the company now, our good friend Jim Frischling from NewOak Capital. Jim, I think last time you were on the show, you dissed me a little bit, but what do you think about this one?
It has nothing to do with the last diss, but I'm completely with you on this one. And the theme I'm liking is this is technology that are going to make vehicles smarter. So we got our phones, we want smartphones, now we're talking about smart vehicles. They just eclipsed, I think, almost 500,000 vehicles now. And one of the testimonials from their client talked about savings of over $1 million in fuel costs, less accidents by some dramatic change of like over 80% reduction. And I think one of the themes I'm liking here is e-commerce. And then you might say, why do I care about that? The fact is, if you believe more people are going to be buying online, which I do, then trucking not only is more important, but smart trucking is going to have to get involved. So I think there's a great tailwind here for them.
Rev up that diesel. All right, Matt, what do you think?
You have the same sound effect for trains, for trucks. You got to change up your sound effects.
Yeah, I don't know.
I'm on board with everybody here. I really like it. Only 11% of the commercial vehicles in the United States use this now. So I think there's obviously a lot of opportunity there. And what I really like, the opportunity for this company is they have over 28 billion data points that they've taken from all this. Eventually, they're going to package that together, and they will sell that as another service. So there's a lot of upside, not a lot of big competitors in here as well. Right. So it's very easy for them to continue to expand.
Fleetmatics.
Yeah, and you know, I liked all their, like the technology, the data, the analytics that Matt is talking about is a big differentiator. I was on their website today and really looking at them. In 73 days, they're celebrating their 10-year anniversary. So, you know, exciting to see this company. And they're also hiring. They're hiring both in the U.S., across the U.S., and they're hiring in UK and Ireland. So a lot of good things seem to be happening. Look at that chart there,
too. That is a beauty. Look at that. You can see the breakout. Oh, man, I wish you guys could see the volume there. That is a beautiful chart. Hey, up next, I've got another stock suggestion coming later on in the show. Jim will be back because he said the right things this time. He'll be back for another one. So now, what can you take from today's sell-off? Well, the reaction to Russia, it derailed our rally early on. But let's face it, guys, if there really was a war, if there was really an invasion, the Dow could have been off at least 1,000 points, maybe more. So you really still want to be long this market and you want to be listening to my ideas. I've got another one coming up just for you in a few moments. All right, guys, let's get down to it. I got another stock idea for you. It's Taser International. I know everyone's heard the name before. I got to tell you something. Even before the flare-up in Ferguson, this is a company I liked a whole lot. But the tension and violence underscores the value proposition for investors, police departments, and let's face it, society at large. On their homepage, the company uses a formula, and they state that 129,000 lives have been saved because of the deployment of their tasers. Now, there's also a new camera product that's linked to the website called evidence.com. In one study alone, they said that one police department used it. They said it brought citizen complaints down almost 88% and the use of violence down by 59%. In the most recently completed quarter, bookings for that camera and website, $11 million, up more than the 2 previous quarters combined and $2 million a year earlier. This thing is starting to catch fire. It's also making really nice inroads around the world. They're strong in the UK, Australia, Korea, Singapore. Gross margins, I talk about them all the time, edged up 62.4 from 61.4. And they have these newer models, so as the older things come out, the newer ones are doing well. They have the X26P, and then orders for that and the retail for that was up over 126%. Talk about contracts. This month alone, Fresno ordered 100 cameras with the subscription. Houston ordered 5,400 more tasers. They've got orders from Burlington, Vermont, Coleman, Alabama, Flagstaff, Arizona. Now, I got to be honest with you. I've been in the stock for a while, and I've been very disappointed with it. But here recently, it's really starting to do very well. Ultimately, I think it's going to change hands north of $20 a share. Jim, what do you think of this one?
You know, the stock is taking a little bit of a beating and is down about 26% on the year. And I thought we might be having a ledge versus a bottom conversation. But I agree with you. And part of it is I like the story you told about the camera. The tasers get a lot of debate. Are they good? Are they not good? But their camera business, they sold more cameras, 4 times as many cameras in the second quarter than they did in the last 12 months. Their margins are 15% growth margins for the second quarter. That's 10 consecutive quarters of double-digit growth. So overall, I'm liking what they're doing. One of my concerns, their account receivables is high relative to their cash position. I think they're doing so much work with police departments and municipalities. They're slow payers. Right. I think they should watch out for that. But overall, I really like what they're doing.
Right. Matt, you like it?
I don't like this company, but the more that I hear you talk about it, the more that I read about it, I'm starting to become a believer. There was a pilot program that's proposed this week in New York City that'd be about $5 million for these new cameras. And if that starts, you know, and you say, well, why are you wasting $5 million? Well, the city of New York spent $152 million in judgments on police misconduct. Exactly. How much money you'll spend by having that camera? It's not going to go to that judgment anymore. So I think we could see this move. But the pop today, 9.5%, I think it's kind of on this news. I wouldn't buy on this big. I'd look for a little bit of pullback. I
got to tell you, though, Johnny, I've been in the stock. It should be $20 already. I'm so frustrated with it. So I think it's worth chasing. But I will admit to the audience, it's been a disappointing stock, though it's hard for me to understand why. Why? Because you think about given a choice between a policeman using a gun or a taser, I think almost everybody would say a taser would be better.
Well, you know, timing could be everything. And, you know, when you look at this company's marketing right now, they are marketing to the police department. And their motto is keep rising. They're gearing to them and saying you need to serve and protect, keep rising, do the right thing. And they're very focused on it. They got a great video on their website. But when you look, I love to look at, are these companies hiring? They're hiring as well.
People just hate this company, too. People love to hate this.
Let me tell you something. I saw police break up a fight in Baltimore with a taser gun. I have never seen people run for their lives so fast because they don't want to get tasered because it hurts so much. So these things are highly effective, and police will use them. Got to stop you right there because we do have some breaking news for you. Texas Governor Rick Perry has been indicted for abuse of power over threat to veto prosecutors' funding. That's all we know for right now, guys. We're going to bring you more information as we get it in. But as you can see, Governor Rick Perry indicted just moments ago. All right, I'm sorry, Kate. I know you're a big fan of the police department anyway. Yeah,
you're
of course.
a fan of Law and Order.
But
this, I think it works.
SVU only. I'm just kidding. No, I absolutely do. I think it's really effective, and I'm saying it in jest, but people really are scared. And I think that when you are using a show of force that's less violent than using a gun.
When you were eating one of your marijuana pizzas, did you let anybody taser you on purpose?
Wow. No, Charles, I didn't. Right. None of that happened. Can we get to the Ask Pete?
All right, let's get to the Ask Pete, guys. Hey, you guys know the drill, right? Anytime you have a question about the markets, making money, curious about an industry or stock, you can always ask me. And Kate, when she's not eating that pizza, she's checking social media for us. What's the question today, Kate?
I should stump you.
It's Friday.
Instead, I will ask you, this came in from Art during this show. He says, any tips on how to manage 20-plus stock recommendations a week? What do you think?
First of all, Art, where are you getting 20 stock recommendations a day? I know what you're doing. You're not watching this network. You're watching another network where they give you 20 recommendations a day, 100 a week, and then a month later when one of them works out, they say, I told you so. That's disingenuous. You have to watch this show every single night if you want honest to goodness. I give you 2 or 1, but here's what you got to do. It's not about the stock picks. It's not about the individual stocks. Compose your portfolio thinking about sectors. Right now, for my subscribers, with their model portfolio, I say you should have 2 stocks in consumer, 1 in financial. 2 in transportation, 1 in energy. We got 3 in technology, 1 in service, 1 in medical, 1 in agriculture. We've been very heavy on industrials with 3. So that's your portfolio right there. Once you've populated this portfolio, you manage the portfolio. You listen to these new ideas. You do your homework if you want to. But this is the way we go about it, Jim.
I agree. You know, you're talking about diversification. You're talking about balance. Some sectors will be hotter than others, and that's all cool. But I do agree, it's not about the hot pick of the day. It is about looking at your overall portfolio and what's your investment horizon. And over the long term, equities does play out for you.
$100,000 in the market. How'd you break it down?
Probably about 12 different stocks, maybe an ETF or 2 in there. But I build what's called the watch list. I always tell my clients, build a watch list. It could be 10 stocks or 200. You build a watch list.
All right, and stop watching that other network. You're going to get 20 ideas tonight. You're going to be too confused and you won't make money. But we want to thank Jim Frischling for joining us. He always knocks the ball out the park. And guys, you know, my thing is about passion. I want to help others. I want you to learn about the markets. I want you to have confidence and start a business. I want you to get in the game. Me and the pros are going to be back with some words of wisdom for you. You don't want to miss it.
Let me get my ticket, baby. Let me get in line. I can tell the way you like it, baby. Super size.